Welcome to The Explainer. Today, we're going to dig into the single most important trait for success, not just in investing, but really in life. And I'll bet it's not what you think it is. So let's jump right in. We're going to start with a story, a bit of a cautionary tale actually, about this absolutely brilliant investor that you've probably never heard of. And there's a very good reason for that. His story, well, it holds the key to everything. Yeah, didn't think so. And that's kind of the whole point. This guy, Rick Guerin, he worked right alongside legends. We're talking Warren Buffett and Charlie Munger. By every measure, he was a true investing prodigy. Just to give you a sense of how good he was, get this. Between 1965 and 1988, the S&P 500 went up about 316%. Rick Guerin's fund, it returned a completely mind-boggling 22,200%. I mean, the man wasn't just good, he was an absolute superstar. And you know, he wasn't some guy on the sidelines just watching. No, he was a key player. He was in the trenches with Buffett and Munger, acquiring companies like See's Candy and Wesco Financial. He was literally helping build the foundation of what would become Berkshire Hathaway. So, what on earth happened? How does someone that smart, that successful, just disappear from the history books? Well, Buffett tells us exactly why in one single sentence. He was in a hurry. And being in a hurry has serious consequences. See, Guerin used a ton of leverage, that's borrowed money, to try and get rich even faster. So when the market crashed hard in the 70s, he got a margin call. He had to sell his Berkshire Hathaway shares back to Buffett for just $40 a pop. Today, a single one of those shares is worth well over $500,000. Ouch. Guerin's tragic story, it really cuts to the heart of what it takes to succeed long-term. And it's perfectly summed up by a classic psychology experiment you've probably heard about before. Right, the marshmallow test. You offer a kid one marshmallow right now, or if they can just wait a few minutes, they can have two. Well, Rick Guerin, for all of his genius, he faced his own marshmallow test. He just couldn't resist the temptation of getting rich right now, and it ended up costing him a fortune beyond imagination. So you see, what this all boils down to is incredibly simple. Success isn't about having the highest IQ. It's not about some secret formula. The single most important trait is having the psychological strength to play the long game. It's all about delaying gratification. Okay, so now let's look at the flip side of this. Let's look at a company that absolutely mastered this idea of delaying gratification. A company that showed what's possible when you have what you might call a capacity to suffer for a much bigger prize down the road. You know, most people probably think Nespresso was some kind of overnight success. But the reality, it couldn't be more different. The first patent was filed all the way back in 1976. It then took a full decade, 10 years of development and spending money before a single customer ever bought one. That is a huge capacity to suffer for a future reward. And this whole pattern, patience versus impatience leading to these wildly different outcomes, it's not just a one-off thing. Once you see it, you start to see it absolutely everywhere, in every single field. Just take sports. In Indian cricket, you had Sachin Tendulkar and Vinod Kambli. Both were seen as these once-in-a-generation talents. But Tendulkar focused on just relentless, long-term discipline for decades. Kambli's career, well, it just fizzled out. Same talent, completely different time horizons. Or how about Indian retail? Radhakrishnan Damani built his empire, D-Mart, super slowly, focusing on making every single store profitable. Compare that to Kishore Biyani, a Future Group, who expanded like crazy using tons of debt, and the whole thing collapsed. One was the tortoise, the other was the hare. This pattern even holds true for the biggest global giants. You've got Nestlé, which has spent over 100 years patiently building brands and pouring money into R&D. And then you have Kraft Heinz, which, after a big merger in 2015, went all in on aggressive, short-term cost-cutting that ended up really damaging its most famous brand. And we see it in the high-stakes world of banking, too. Uday Kotak built Kotak Mahindra Bank with this conservative, steady-as-she-goes approach. On the other hand, Rana Kapoor grew Yes Bank super aggressively, growth at all costs, which led to its failure. It is the same exact story, just playing out over and over again. So, what's the big takeaway from all these stories? What's the final lesson here? Well, for that, let's go back to the wisdom of Rick Guerin's old partner, the one and only Charlie Munger. Munger just framed it perfectly. He said, success isn't about being the fastest hare right out of the gate. Nope. It's about being the steady turtle. And what does that turtle do? It just keeps learning. It becomes a learning machine. And here's how Munger actually put that idea into practice. He turned delaying gratification into a daily habit, a philosophy. He decided he would pay himself first, not with money, but with his time. He'd give the best hour of his day to himself, to learn, knowing that the compound interest you get on knowledge is the greatest reward of all. And so at the end of the day, this isn't just about money. It's really about how you invest your single most valuable asset, your time. Rick Guerin wanted his reward immediately. Charlie Munger was willing to wait a lifetime, compounding his knowledge every single day. So the question we're all left with is a pretty simple one. What will you do with your best hour?